Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Hello and welcome to Bloomberg Went Live. You're watching Trend Spotting. I'm Navneet Saluja D'Souza.
Hi, I'm Agam Vakil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. But first, the headlines. Indian markets continue to slip in trade, and the Nifty gives up the 10,100 mark, and India wicks advances. And India's services PMI contracts in November to come in at a 3-month low. But it is good news for auto component makers like Bharat Forge and Ramkrishna Forgings, with the US multi-axle truck sales rising more than 60% in the month of November. Schools and colleges in Mumbai are shut after the state government issues a weather warning with Cyclone Oki approaching.
Okay, let's take a look at the markets right now. Clearly, it's not turning out to be a great week, and the weakness still persists in the markets. Nifty has given up the 10,100 mark for the day. Well, the broader markets have too come under pressure. If you look at the broader markets, the advanced decline ratio will tell you the clear picture there, as we've seen more of declines coming about. That's the NSE stats there on your screen telling you the ratio is almost 1:2 currently. But overall, if you look at the sectoral indices, I guess only the Nifty Realty Index is just about holding up in the green today. But besides that, whole host of losers. The metals index is down as much as 1%, and even the IT index, which was holding about till the morning session, has given up its gains. But still, your heavyweights from the likes of Infi, TCS are holding up in the green. There you go. IT index has just turned green in the last 15 to 20 minutes. ICICI Bank is also holding about in the green. Let's just pull up the Nifty contributors list, and that will tell you exactly what's dragging the index lower in today's trading session. So your heavyweight, HDFC Bank, which has almost 10% weightage on Nifty, is dragging the index lower. L&T, ONGC, Power Grid are a couple of other losers. So the list is actually telling you the sell-off is broad-based, besides HDFC Bank, which solely is dragging the index lower by almost 9 to 10 points. On the gaining side, Reliance Industries, after losing in the last few sessions, is holding about in the green. And Infi, IndusInd Bank, TCS, as we mentioned, these are the heavyweights which are curtailing the moves on the downside as of now. But overall, Agam, I think Nifty and Bank Nifty both have been able to protect their 100-day moving average and 50-day moving average if you look at the lows, because the trend in the last 4 to 5 sessions has been for both these benchmark indices, they've been touching lower highs and lower lows, which may not be a great sign.
Right, it may be a matter of concern for a lot of these traders, but let's also take a look at some of these key gainers and losers when it comes to the mid-cap space. And we have Videocon Industries rising once again, building on the gains that we saw last week. It's up around 4.7% for now. Den Networks is also gaining up as much as 4%. Along with Den Networks, we have seen a lot of activity in the entire cable space. So where one of the beneficiaries is out there, get in with Den Network, Kalpataru Power Transmission, and Hexaware Technologies. This stock is clearly re-rating, considering the kind of gains that we've seen, not just in the past couple of weeks, but over the past couple of months for that matter. And of course, we will be talking about the entire IT industry later on with an analyst, and to give us a view on Hexaware, along with several other mid-cap companies as well. Parag Milk Foods, of course, is gaining on the back of an Edelweiss note where we have seen some positive cues coming in for the entire dairy sector. On the losing end, we are looking at weakness in something like a Reliance Communications, VIP Industries, Shipping Corp of India, and Sonata Software. So some of these counters losing out anywhere between 3.5% to 4%. And while weakness persists in the benchmark indices, the momentum is still with some of these broader market stocks in the lead.
Before we proceed, I just want to highlight two stocks which we actually highlighted in the closing show yesterday. Pulla Wiseman Forex, that counter is gained once again, up almost 13%. It's trading around its 52-week high level, so good going once again for Wiseman Forex. We don't know if something is brewing here. Nitco Limited is the other counter which has surged almost 9% once again after being locked in upper circuit of 20% in yesterday's trade. So clearly, it looks like a stock-specific market where there are individual pockets which are doing well in a weak market like this. Okay, then on trend spotting today, we discuss the rising competition in the retail space as we connect with Deepak Bhansal of Cantabile Retail. We discuss if recovery is round the corner for IT and the best bets in the space as we connect with Urmil Shah of IDBI Capital. We also discuss the rising cost pressure concerns for Nalco as we connect with the chairman and managing director of the company, Mr. T.K. Chand.
Well, of course, Navneet. So I was coming back to the IT industry. Now, what we've noticed in one of the studies carried out at Bloomberg Quint is that when it comes to the Bloomberg consensus, a lot of these IT companies have seen EPS upgrades as against a lot of the other sectors which have probably seen some amount of downgrades where the earnings really haven't come. What's curious is that the Indian IT industry actually stands out as one of the top two sectors. So, that's the reason why.
And this is the sector which has not contributed to the gains in last, at least this year we've seen for Nifty. I remember Jayesh doing a report yesterday saying that all the Nifty constituents, all the IT Nifty constituents have seen an upgrade post the quarter two.
Yes.
But I want to talk outside that. Look at stocks like Hexaware, Mindtree. They've given good returns in the last 1 month.
Yes, they have. They certainly have. And, even if you consider the movements of something like an Infosys or a TCS, at least on the last 3 months, they have gained to a certain extent. Perhaps outperforming some of their peers. But let's get an idea of what's going on in the sector. Maybe a reason why we have seen these EPS upgrades while the rest of the market does see an either standstill or perhaps an EPS downgrade. So for that, we have Urmil Shah, Assistant Vice President and Research Analyst at IDBI Capital with us. Good morning, Urmil. I don't know if you have also witnessed the same trend and if you have also applied these EPS upgrades for the stocks that you track in the IT industry. But if that is the case, can you tell us the reason why the likes of Infosys, TCS, even Tech Mahindra, which stands to gain the most in terms of EPS upgrades, why is it that we are seeing this pattern come through?
Yeah, hi. So yes, within our coverage also we have seen that most of the IT companies did see the EPS upgrades coming from our side, and Tech Mahindra did lead the pack. Just to put into perspective, second quarter for most of the IT companies did not have the impact of salary increase, or it was partial, apart from Infosys. And the currency was also not volatile on a quarter-on-quarter basis. So while the revenue revenue growth has been largely in line with what we had expected, the beat actually has come more on the EBIT margin performance and also partially on the forex gains. So as a result, on this front, in fact, Tech Mahindra delivered a 170 bips improvement in EBIT margins, which was almost 100 bips higher than what we were expecting. So they really performed very well on the EBIT margin performance, and that's why in fact for FY18 we have upgraded TechM's EPS by 5%, and even for FY19 by 3% post its Q2 results.
Urmil, would it be safe to assume now that the earnings from the IT pack may have bottomed out? As you said, the EBIT margins stood out in the second quarter earnings. Do you think the second half for these companies could be better and there could be more EPS upgrades coming about for FY19, FY20?
Yeah, I would say so. There remains a scope for more APS upgrade in the second half, but I think that would be more led by higher than expected revenue growth rather than EBIT margin performance, because of two things. One, the expectations as regards the growth are really low, expected from the large caps, high single digit at best case. Also, we need to keep in mind that in the second half, there is seasonal weakness in the third quarter because of the holiday season in the US and the furloughs. And also, Q4 has slightly less, number of working days. That's why I think that the EBIT margin improvement through operational efficiencies, there is limited scope. But yes, I think the EPS upgrade could actually come in because the expectations from revenue growth is very low.
Okay, so if we can pull up that chart where we had three of the largest IT companies and their performance over the last 3 months, well, we will notice that Infosys has gained the most. In fact, that's moved up by nearly 10%, and that's followed by TCS, which has also gained around 6%. HCL Technologies, which has been the darling of a lot of your foreign institutional investors, that has actually declined by as much as 1.4% in the same period. And of course, HCL Technologies was one of the more preferred, large cap IT companies in comparison to some others. Can we also take a look at what Wipro and Tech Mahindra have done in the last 3 months? Well, there you have it. Tech Mahindra has also advanced around 8.3%. On the other hand, Wipro has declined by as much as 3%. So, Urmil, once again, if I just talk about the top 5 IT companies, that's the Nifty 50 IT companies. You've spoken about Tech Mahindra. How would you pitch the other 4 players in terms of your preference and why?
So, in fact, we still are maintaining a cautious view on the sector as a whole, because still there are not very clear signs of a sharp pickup in growth in FY19. And that's why we have only one buy amongst the IT large caps, that is HCL Technologies. We are having an accumulate recommendation on Tech Mahindra as well as TCS and Infi, in fact, and on Wipro we actually have a whole recommendation.
Urmil, let's shift focus from large cap to the mid cap and the small cap companies. I was just looking at stocks like, I don't know if they are under your coverage, but still Sonata Software, Nucleus Software, and I'm sure Mindtree and Hexaware are the ones which majority of the analysts would be tracking. So these are the stocks which have seen good traction post the Q2 earnings. Do you think there's more value in the mid cap IT pack vis-a-vis the large cap?
Yeah, there is more value, but over there we are again having preference towards companies which are not run-of-the-mill IT companies. We prefer companies with differentiated business model, and clearly 3 companies stand out very well on that front. The first one is Cyient. We have a buy recommendation on the stock. The stock has also done well, for us. We also like Persistent Systems as well as Tata Elxsi. We believe that all these 3 companies, have differentiated business model, and that's why they have been resilient, and we expect them to deliver a double-digit revenue growth in this year as well as in FY19. Amongst the other companies, we also like L&T Infotech because of a very strong growth which they have delivered. You spoke about Mindtree as well as Hexaware. Yes, the stocks have actually done very well. In fact, Mindtree, after indicating that the third quarter they are expecting pick up in the growth as well as profitability, the stock has done very well. but we need to keep in mind that both of the stocks are quite expensive. In fact, almost Hexaware is more expensive than TCS as well on FY19 PE basis, and Mindtree would be just a notch below TCS. So on the valuation front, we are not comfortable on both the stocks. We believe that it's better to be with companies which are having differentiated business model amongst the mid-cap IT stocks.
Okay, Urmil, before we let you go, there's one final question from my side, and that is concerns or perhaps challenges that may lead to some issues when it comes to IT companies and the Indian IT sector as a whole for the second half of this financial year.
So, third quarter will have the impact of the furloughs and holiday season in the US. As of now, based on whatever interactions which we have had, we have not heard any sort of, caution for a higher impact. So that is one thing which, we think if there is a higher impact could impact the growth for the companies. And while there has been no news flow at all as regards any kind of adverse implications on the visa issue, and it's more of a FY19 and beyond phenomenon. If there is news flow on that front from the US, so this could have overhang on the sector. So these are the two, kind of monitorables which could be a sort of risk on the sector.
Okay, Urmil, we'll leave it at that now. Thanks a lot for joining us today and giving us your views on the IT sector, which has been in focus of late. But remember, the markets are weak. We try and identify some small cap, mid cap stocks for you, which are making big moves. And one of them is Cantabile Retail, a counter which is actually a garment manufacturer, but is now engaged in designing, manufacturing, branding, and retailing of apparel. So I just want to highlight, there is some bit of profit booking which is seen in the counter. It's down as much as 7%. Yesterday, it was locked in upper circuit. But if you look at the stock in last 1 month, it's given returns of over 30%. It's not 8. It's trading at multi-year highs, because if you look at the all-time high of this counter, it was registered in October 2010. So that's Cantabile Retail for you. What's working well for the company? Let's try and understand from the management itself. Joining us now on the show is the whole-time director of the company, Mr. Deepak Bhansal. Mr. Bhansal, good morning, and thanks a lot for joining us today on Bloomberg Quinn. Before I talk about your business, just want to get a check. I can't see the second quarter numbers on the exchange's website. Can we know when the earnings will be coming out?
Ma'am, our board meeting is there on 12th of December, so numbers will be coming on the 12th only.
Okay, so we'll wait and watch out for the numbers.
12th December.
Okay, I'm not going to ask you for any figures here, but if you could give us a sense, how has the first half of this financial year been for the company? Because I remember there was a turnaround which was seen from FY15 onwards when the company started posting profits, but still the bottom line CAGR has not been so great. So just if you could take us through the performance so far.
Ma'am, our Q1 results were good. Like we posted 40% growth in the top line, and our bottom line got doubled. So I hope this kind of trends will continue in future also.
Okay, Mr. Bhansal, my question was to do with you focusing on your retail business now. We wanted to get an idea of the number of stores that you have across the many cities that you have, and what is your plan in terms of expansion? If you could also give us an idea in terms of square feet for your retail store expansion.
Right now we have around 175 stores pan-India, and it's around present in 40 to 45 cities. And we have planned to like add 40 stores per year. And hello?
Yes, Mr. Bhansal, we are listening.
Disconnect. Hello? Yeah. So like 25 stores we have already opened by now, and we have right now like 150,000 square feet retail space area, and we'll be adding another 40,000 square feet in the coming year.
Okay, In FY17, you did a top line number of somewhere 161 crore and the PAT was around closer to 5 crore. Could you tell us in FY18 and FY19 what kind of growth can one expect? Just give us a ballpark figure.
In 18, 19, in 17, 18, we hope to cross 200 crore figure. But in 18, 19, definitely we will like to move forward with a growth rate of 25 to 30%.
Okay, Mr. Bhansal, the other question I had for you was to do with your plans in the internet space. Now, what we've also noticed in case of a lot of other companies, they're either tying up with online players or putting up their own online version of for retail. So we wanted to understand what your plans are here, or whether or not you continue to remain a out and out brick and mortar player, and for now you would want to resist moving into the online space.
We have started selling in the online space some years back, but we have shut down our online operation because the turnover which we were getting were very small compared to the offline stores. So right now we don't have plan to enter into the online space again.
Okay, so no plans to get into the online space. Your inventory days in FY17, you can correct me with the numbers, were about 151 days. The cash conversion cycle is about 119 days. If I compare it to your peers in the same industry, I think it's on the higher side. Is the company doing something to reduce the number of inventory and the cash conversion cycle days?
Yeah, we have plans to reduce the inventory days and stock turnover ratio, like coming is twice. We want to take it to the thrice in a year. So we are doing more work on the efficiency part. We are more focusing on the stores which are giving us good per square feet sales. So generally the stores which are giving good per square feet sales have high stock inventory turnover ratio. So we have shut down some slow moving stores also, and we are only growing with the fast moving stores. So our inventory turnover ratio is expected to rise in the future.
Okay, Mr. Bhansal, we'll be watching out and keeping an eye for your earnings for the second quarter. But for now, thanks for joining us and giving us an outlook on your company. But we move on to the third trend of the day, and this time it's cost pressures, which seem to be rising for the aluminium industry, with bauxite and caustic soda prices on a significant rise. What is the impact which is expected on the players in aluminium space? Let's ask TK Chand, the Chairman and Managing Director at Nalco, and also our colleague Nikki Merchandani, who also tracks the space, joins us to take over. Well, Nikki, it's all yours.
All right, Agam. We have seen rising cost pressures in the aluminium industry. To begin with, we'll go to the management, Mr. Chand, and we'll ask him the first question that we have is, we are seeing a rise in cost pressure in aluminium industry. As we know, both bauxite and caustic soda prices have risen substantially. You both into alumina as well as aluminium. How does this development augur for you?
Right now, caustic soda prices are on rise, and in fact in November itself the prices have increased by around 20%. So as far as our company is concerned, we have taken of the caustic soda, and another step that has been taken to change the mining practice so that high grade bauxite can be now sent to the refinery, so that consumption of the caustic soda comes down, because high grade bauxite will have less silica content, and the silica content decides how much caustic soda is to be added. So therefore these two steps we have taken to meet this challenge, and we hope that that will reduce the specific consumption of the caustic soda, and to that extent we will be meeting. And I expect that since the caustic soda prices have already gone quite high, this will be probably the peak, and in the coming days that will slowly come down.
Talking about your realization, what was the realization of your last shipment of alumina per ton? It will be nice if you can compare that with the average of Q2 realization per ton.
Our last shipment was 502. That is on 20th of November. And again, on 1st of December, one more tender has been opened. That also, there also we have got same 502. So if we compare with the average, it will be around $20 to $30 higher actually. And coming days, when this price will continue, then naturally the average band it will come down. But currently, the compared to the previous average, current tender price is a little higher.
Brings us to the question, we'd like to understand, will we see higher benefit of higher alumina prices in this quarter completely?
In this quarter, it will be coming the higher alumina pricing benefit, because most of the price started taking a spike from September onwards. If you see that from 316 in end of August average, it started coming up to 527 in our tender. And in index also, price index from 316 in end of August, in September, October, November, it went to 479 index, whereas in our case from 316 it went to 527, around 10% above the index. So therefore this advantage will now accrue in this quarter actually, the third quarter, that is the end of December. So we have to see that what kind of impact it is to bring in.
With this, we'd also like to understand your strategy on cost saving, especially your power and fuel cost, which is almost 30% of your overall revenue. Going forward, what are your cost optimization techniques that you're looking at?
For this year itself, we have taken the step, as I told, that we are not taking up startups. That will reduce power consumption. Second, the specific DC energy consumption in the smelter, that we have taken some of our operating parameters, controlling those parameters, so that some reduction will be coming in the energy front. But as far as the long-term plan is there, we are now trying to open our what's called the coal block, maybe in next year, sometime in the third quarter, so that once this coal block is open, the price of the coal will be quite cost effective for us, so that this price of the power will be coming down. That's the in the medium term, it is the way forward.
This brings us to our last question, which is volume growth guidance of both alumina and aluminum business in the remaining part of the fiscal and also for the upcoming financial year.
As far as alumina is, we will be producing around 7.5 lakh ton of alumina, and aluminium will be producing around 1.5 lakh ton. So that will be the production that will be taking up in the next 5 months.
Thank you so much for your time, sir. It was a pleasure talking to you. Guys, back to you. Just a key point that I'd like to make here is the contract prices are expected to be higher than your spot prices, a factor that everybody would be looking for in Q3 and which did not play in Q2.
Okay. So that's the update coming in from the management of Nalco, where they have highlighted they expect some sort of cool off in the bauxite prices coming ahead. But before we wrap on the show, just want to highlight few stocks. You've got Setco Automotive. Remember, the company came out with its numbers. We did speak to the management. They highlighted they expect almost 14 to 15% top line growth for this financial year. So it's up another 10%. Ramki Infra, Quick Heal are a couple of other counters. And the reason why Nifty Realty Index is up today, that's largely got to do with the move seen on Phoenix. That stock's been trading with good gains of 6%. Shankara Building is the other one, which is down 5%. And stocks which have been going up in the last few days, Madras Fertilizer and MT Educare, are seeing a bit of profit booking coming about.
Yep, absolutely. A lot of those stocks have been moving in trade, but that's all the time we have on this show. It's a wrap on this edition of Trendspotting. Up next is Hot Money with Darshan Mehta. Stay tuned in.